A very good evening. Thank you so much for tuning in to today's episode of The Business Age. You will be with me, as always, Naringwa Fiona Muthoni. The World Bank recently released the Rwanda Economic Updates report, and on the show today, we will have a deep dive into what are some of the key outcomes and some of the key recommendations within the report. I will have a conversation with the senior country economist at the World Bank Rwanda. Come along. Mr. Calvin, thank you so much for making time to speak to us and for joining us on this particular conversation. Going through the recent released Rwanda Economic Update report, a lot of interesting numbers. Start by telling us what are some of the key highlights that stood out during this recent released report.
Thank you so much for this opportunity. As you know, the World Bank, we have to publish twice a year Rwanda Economic Update that gives you, in fact, basically an idea on the last development on the economy. But we also generally, in fact, have one focus topic, one special topic, which allow us, in fact, to have a deep dive analysis on something that we consider as an important long-term structural challenge for the country. So for this Rwanda Economic Update that was launched just 2 weeks ago, our special topic was mobilizing domestic saving to boost the private sector in Rwanda. So your question was about the main highlight of the report. Let's start, in fact, with maybe some of the main highlights from the macroeconomic point of view. To say that the report revealed that the Rwandan economic, when it comes to 2023, has been highly resilient despite multiple challenges, external challenge, but also domestic challenge. You remember that we have natural disaster, major flooding with more than 130 people dying. So despite this, Rwanda actually, in fact, managed to have a growth rate that we estimate at going to be around 7.2% for 2023. So this was remarkable because if you take other African countries, the average for Africa is just going to be about 2.8%, a little bit less than 3. So Rwanda is having a growth that will be almost 3 times what you have on the average for Africa. So that was one point. The other point is that growth actually, in fact, translates into some improvement in employment, as we saw the share of employment in the country increasing by more than 2 percentage points of the population, meaning that before, in 2022, in Rwanda, you have, for example, you have 48% of the population being employed. In 2023, you were having more than 51%, in fact, of those people being employed. So this was a very positive news. Another positive news from the macro perspective was the inflation. You remember, in fact, in 2022, notably in November, we have very high inflation, around 22%. As we publish this report now, that inflation, in fact, was already at 6.5%. And last time I checked, in fact, for January, we are already at 5%, which is really, in fact, the margin that the Central Bank of Rwanda is looking for. That's good news because this, in fact, was accompanied by a decline in the food price, which means, in fact, the poorest, in fact, that depend heavily on the food consumption, in fact, are going to be better off. Let us talk a little bit about this special topic on savings, because everything we are talking about here, in fact, about the short-term challenge. But for an economy to sustain that performance over the long term, you really need, in fact, to rely on solid base of savings, either foreign or domestic. But Rwanda, in fact, in his case, the country want to be resilient, want to be more independent from external funding. So it's very important to mobilize their own domestic saving. And what the report revealed to us is that Rwanda has been doing very well in terms of introducing new reform, in terms of introducing innovative product. A JOY is a long-term saving program, for example, in Rwanda. So the country has been very good doing that. And we are even seeing, in fact, an increase in the financial inclusion in the country. However, when we consider, in fact, where Rwanda would like to be in terms of his growth, in fact, over the long term. When we compare the country, in fact, to his regional peer, in fact, the level of saving in the country, which is still always between 11% of GDP and 14% of GDP, is low. So we need to be above 25% of GDP in terms of saving. So that's why the report, in fact, came out with a series of recommendations in terms of how this saving could be improved, recommendation around the banking sector, insurance sector, the pension system, the remittances. These are just some of the issues that were explored in that report. Stop here.
We'll come back to some of the recommendations. You've touched on savings. Looking at the numbers, actually, still very interesting topic there. But for now, I want to understand 7.2%, looking at the projections. And as you said, comparing to other African countries, that's relatively on the high end. What are some of what will we attribute this positive trend to? What are some of the macroeconomic policies that were put in place in order for the country to be able to cushion some of these external factors that we saw?
Yes. So you have some immediate measures we can talk about, but I would say, in fact, to explain this, we even have to go back to the way Rwanda responded to the crisis. The very disciplined, rigorous way he replied, in fact, really giving positive signal that this is a country where people are safe. So as a result, just after the crisis, you have the tourism, in fact, restarting. So Rwanda continues, in fact, to host major international events. So we now have more tourists, in fact, than before the COVID. So that's been a major factor. As a result, you see in this number, actually, the service is what is really driving the growth. So in the service, you have hospitality, so this tourism. But we also have, in fact, the information and technology linked to the increased use of internet, the increased subscription of mobile in the country. But beside that also, I would say the industry sector has also been doing well. Has been doing well because something that Rwanda, in fact, really have done very well is to know how to use the crisis. You know, that flooding crisis that we had in April 2023. So immediately the country, in fact, initiated some construction project, and those construction projects contributed substantially to the to the growth that we are seeing now. And we also seeing some increase in the manufacturing because that was a year of high food prices. So the food processing and industry, that also did very well and contributing to the growth that we have now. Unfortunately, yes, the agricultural sector is still the sector that continue to suffer from the bad weather. This was actually the cause of the inflation. And that was not, this is a sector that did not play a big role on the growth that we're seeing.
So you're saying risk factors minus weather, risk factors not only to the agriculture sector recovery, but also just looking at the macroeconomic factors. We're seeing regional conflicts. We're seeing also what is happening within Europe. What are some of the other risk factors should we consider, should we have in mind as we even look at these positive projections for the economic growth?
That the major determinant of the inflation has always been agricultural product, is the food side, and and the major driver behind the food inflation has been local production. So if local production is doing well, in fact, the country is better prepared, in fact, to face any shock that we can have from outside. Of course, when you have a combination of domestic shock and also external shock with some disruption of supply chain internationally, with Ukraine crisis, with what is happening in the Middle East, that could potentially increase the price of energy. Yes, these are major factors that could also play negatively to this forecast. Yeah.
And just looking, you've touched on some of the trends that we saw, employment numbers also increasing, but how have all these other factors been mirrored within the labor market? What trends are we seeing currently?
Yes, so the main thing that we can say in terms of labor market is that so you really have this improvement. That's very directly related to this sectoral GDP in growth I just talked about. So if you take the hospitality, for example, you're having, in fact, more than 65% increase in employment in that sector. So this is very much related to the tourism. If you take the construction, I was talking about 90% increase of employment in that sector. You also have increase of employment in retail and transport. So these sectors are connected to hospitality. So if you have increase in tourism, you have increased hospitality, those related services, in fact, are going to be better off. However, what we are also seeing is that, of course, because the agriculture sector has not been doing well, we have a decline in employment in agriculture, minus 12% of employment in agriculture in 2023. So this actually a relatively good news. If you have an overall increase in employment, and you have the reduction in the share of the people employed in agriculture, because agriculture is where the productivity is lower, and when people actually are able, meaning that we are having people moving from agriculture to other sectors where they generally, in fact, have better, higher quality of job, higher productivity. In Rwanda, let me give you a number. The productivity in agriculture, if you consider that of service, it will be like 7 times higher, the productivity in service. The productivity in the industry will be 5 times higher. So it's a good news if you have people moving from agri to those sectors. It means that overall, we are having more jobs, but we may also having better quality jobs.
Better quality jobs. Looking at the different factors, you've said the agriculture produce has reduced due to climate change. We've seen trade deficit has been widening. I think the recent numbers, we saw that in the last 1 year, it widened by around 10-11%. How much pressure should we expect just looking at 2023 and even looking at the local currency itself?
The external account, this depreciation of exchange rate that we had in 2023, about I'll say 17%, and this was just the first time that we are having this such higher depreciation in many years in Rwanda. Yes, you are right. This was very much related to the increase in import of food product, more than 65% increase of food product, for the reason that we just discussed, right? The weather, but also the flooding that disrupt very much that particular sector. Yes, now in terms of to what extent we should be concerned about, for example, more depreciation or the level of reserve of the country, I have to say that as we speak now, actually in terms of reserve, the country is going to be about, when we make the point of in terms of what is happening in December 2023, the country may be just about at the same point it was in 2022. So the first 3 quarters has been challenging, but the last quarter of 2023, because of additional resources coming from Rwanda development partners, we have a World Bank budget support disbursed in December. You also have an IMF disbursement in that quarter. That's going to help substantially, in fact, to increase the level of reserve. So we believe that level of reserve is still going to be above the 4 percentage point of what 4 months, about the 4 months of import, the equivalent of 4 months of import in the country, which is good.
We saw the December, which you've actually just touched on, the December 2023 Joint World Bank IMF debt sustainability analysis. It assessed the country's debt to be sustainable, but with a moderate risk of external and public debt distress. What is the current status? Maybe if you could also just give us a bit more overview on that.
Yeah, so it hasn't changed. So the level of debt distress of the country is still moderate. As you know, Rwanda has a program with IMF, and as part of that program, the country is implementing a fiscal consolidation plan with an objective, in fact, to decrease substantially the level of debt in coming years. So these are set of the measures through which the country, in fact, tried to increase the level of revenue, but also cut some unnecessary spending. Very concretely, we have seen that in 2023, for example, the level of spending went down from 32% point of GDP to 28 percentage point of GDP. This is because you have some level of reduction on the infrastructure spending, some level of reduction in some consumption, the public consumption. So this allowed the country, in fact, to keep a level of deficit that was relatively contained the same level as last year, despite multiple shocks that we had this year. That also allowed the country to maintain a level of debt, because the debt is a result of that deficit. To contain the level of debt is still higher, though. It's going to be above 70%. That's high, but it's already lower than what we had in 2021, where it was 73%. So this containment of spending plus the good growth performance that we are seeing, in fact, is helping with the debt, which allow us to assess that the level of debt distress is not going to change. And plus, as you know, the level of debt of Rwanda, the quality of debt also something that matters. It's not just about the high level. The quality is also what matters. And most of Rwandan debt is actually a debt from multilateral and highly constitutional debt, which means that the country is not paying a lot of the debt service payment is relatively limited. So if you consider the total stock of debt in Rwanda, more than 65% of that debt is is a highly concessional debt. So the country is paying relatively low debt service. So all this contribute to maintain that level of debt distress at moderate level.
Okay, very, very interesting. When you were touching on that, I've just remembered what has been happening within the region. I'm sure you've been following what happened in Kenya with the repayment of the Eurobond, Ethiopia, and also some of the other African countries. Just looking at, take us through the numbers, the debt window that currently Rwanda has as of now, because we do know you've touched briefly on the financial consolidation that the government is putting in place, reducing on domestic borrowing as well. Just do talk to us on the current numbers.
Yes, as I was saying, actually for 2022, we had level of debt that was 65%, 65.8% of GDP. That was 2022. However, in 2023, we are going to have relatively higher. We're talking a little bit more than 70%. The reason, not because the deficit increased, it's more because of the exchange rate, because most of the debt are external. If you have your exchange rate depreciating, that then you are going to earn more, right? So that increased a little bit the level of debt for Rwanda. But now, as I'm saying, that doesn't change the level of debt distress, because the quality of debt remains very good, and the implementation of the policy to make sure that we have a sound fiscal framework is really there. We know that the debt management in Rwanda is very solid. If you now want to talk a little bit about other countries in the region, in fact, you'll be surprised to see that maybe the level of debts in absolute in those countries, in terms of ratio of GDP, may be lower than what we have here in Rwanda. What really makes the difference, what I was talking about, is the quality, is what is owned to the private sector, what's owned to the domestic market, and in many of those countries, what is owned to the private sector is very high. As a result, the payment of debt, the debt service is relatively high. It's very high compared to what we can have in Rwanda. As a result, in those countries, in fact, the level of debt distress is actually high. We will just talk about Kenya. You have the level of debt distress that's high because of the quality. That's really what makes the difference here.
And also the private sector mirrors also what is happening. Just give us a current brief outlook of how we're looking at the private sector environment, investments coming into the country. How is it all looking?
Yeah, so as you know, historically, Rwanda has really been the champions of reform to make sure that we have a friendly business environment for the private sector. Our latest assessment in Africa as World Bank, when we were doing the comparison of the country in this area, put Rwanda second, just after Mauritius. In fact, in terms of quality, the business environment. If you consider the FDI, the Foreign Direct Investment Regulation, to what extent the country is friendly, is prepared to receive and maintain them or not. RDB that we have in Rwanda is really considered as a model, not just at the Africa level, but at the national level for the quality of their work. Now, doesn't mean that everything is completely 100% fine for the private sector. We still have some challenges. And some of the binding concerns to the private sector that we are discussing in the joint report that we are preparing with the government of Rwanda, which the updated future drivers of growth report. So we are talking a little bit about the access to finance, which remains an important challenge, particularly for local and small business. So access is difficulty, but also the cost of the financing is a difficulty. We talk about the capability of SME. So you have the creation of firm in Rwanda is very high, but level of destruction is also very high. So this talk, in fact, to the capability of those firms, of their managerial team. So something need to be done, in fact, to help in those areas. And we also talk about the need to improve some key infrastructure. So the electricity, for example, in Rwanda, the access now is very, very good, but cost is also relatively high. There have been a lot of progress in terms of IT, the internet, but more will have to be done. So, for example, the e-commerce is really essential. More business, in fact, can embrace e-commerce and really take advantage of this. And I would say, maybe lastly, it will also be very important that we make sure that when that we have a perfect competition, that the perception of the firm, of the private sector in the country is that they are going to have a fair treatment at all level. In fact, when I tell you that Rwanda is a very friendly environment for business, yes, this aspect is also incorporated. But I just want to mention that Rwanda has this particularity that you have a lot of SOEs, and the SOEs play major role, in fact, boosting the growth that we are seeing in this economy now, particularly when we started from a situation where you have no private sector existing. The SOE has been the one stepping in to really, in fact, drive the growth in the country. However, we always have to pay attention, make sure that the SOEs, where they are operating, they are not hurting the private sector, or they are not scaring any private sector, or they cannot prevent or intimidate any private sector that would like to come in. So really assessing the rationale for the SOEs, particularly in the sector where we have a competition, is something that's also going to be very important to make sure that we have a very competitive market. And another factor I believe, in fact, is the trade. And this is where Rwanda has been doing very well because we have relatively limited size economy. Of course, we are more than 30 million, so that's already very good. But with the African Free Trade Agreement, for example, that we are having now, and Rwanda has been a champion, in fact, driving that agenda. So this is going to be an opportunity, in fact, to stand even more that market. Rwanda can take advantage of the stability that we have in the country, of that friendly business environment that we have in the country, and host more firm, in fact, in order to serve other countries. But for this, you really need some security, some stability in terms of making sure that you are really an open economy. Those that are here can export freely in the region.
Very, very interesting. And this also goes to the next point we've seen in the report. It is indicated that the country needs to shift its growth strategy from government-led to more of a private sector-led, driven by private sector investments. How best do you think this shift could be achieved?
Yes, I think the shift could be achieved just by working more on the binding constraint for the private sector we just talked about, right? Maybe first, why is that the report is making this assessment? Rwanda has been very, very good leveraging his public investment to drive the growth in the country. Rwanda is the African country that spend more in terms of share of GDP on the public investment. But the fact that we're having this growth means that that has been efficient, right? However, because of that level of debt that we are talking about, meaning that the fiscal space to continue doing more of the public, in fact, is limited. It's becoming, it's reducing now. Yes, so we need more private sector. As of now, the level of private investment in our economy in Rwanda is about 13 percentage point of GDP. To reach the level of growth, the vision that Rwanda has to become upper middle income country in 2035 and high income country in 2015. So we need, in fact, to multiply that level of private investment by almost three times. Yeah, so we really have to do more beyond this friendly business environment. As I was saying, yes, we open more in terms of trade to extend the size of our market. We work more, in fact, to strengthen the capability of MSME. And we also work more, in fact, to make sure that we improving the pool of skills available in the country. This will go through the trainings, but in the short term, we could also be more open to other skills that will be coming from abroad, from the region, for example, to help. So that's something that's also so important for the private sector. And innovation is important when innovation is also important. So let's see, we have to invest to support innovation, research and development. I was talking about the IT. So these are all enablers of innovation that we are doing already a lot. Let's try to do even more.
And everything that you just touched on, even looking at increasing money circulation within the economy, goes back to the one of the first points you started with, which was on around savings, looking at figures, savings in Rwanda, comparing to its peers, it's relatively lower. What are some of the strategic regulatory reforms that could be recommended?
Yes, so this one area where I still want to start by saying Rwanda has been doing a lot. Yes. But they still have some margin for improvement. Let me start with the EJO ESA, which is the long-term saving program that the government introduced just a couple of years ago. That's been highly successful. Now we have more than 3 million people participating to that program, representing 37% of the labor market. This considered in any developing country really as a model. However, the country can leverage on this and do even more, because the average level of saving for the participant is just about 10,000 Rwandan francs per participant. So we could do more. Some of the recommendations of the report is to make this system more flexible, giving the possibility to participants to have access in short term to a portion of their saving system. Another suggestion is to increase the threshold, in fact, of the level of saving, for which you can have a matching. You can have the government subsidy. As of now, it's 18,000. If you save 18,000, the government will double that. Increasing that amount could push people to save even more. So these are some of the recommendations. Also, that system now has been mostly focusing on the people in informal sector through the cooperatives. Maybe we could also try now to target even more people in urban area, people outside that group of cooperative. Now, other area where we can really do something to try also increase the saving could be, for example, at the end of the day, taking the initiative to save is an individual decision. And people like to know the why of their action. So this is one area where education is very important. Financial education is going to be important. Just having people to understand that when you save, it's good for you for the long term, but it's also a patriotic act, for example, because you are helping the economy, you are helping the country, you are putting the money that the private sector can then use to create the jobs and help the country, in fact, to reach his ambition. So this education is also going to be important. And another area that explored in the report is how the country, in fact, can really leverage even more the digitization of the financial system that we are seeing in the country now, the boost in the mobile money. So something can be done, for example, in fact, to increase the saving, the mobile saving. As of now in Rwanda, the issue of e-money, they don't pay interest on mobile account. And we have example of countries like Ghana, Tanzania, Kenya, where if you have a mobile account, some interest, the interest rate is paid, in fact, on what you keep there. So is this something maybe that could also be tried in exploit in Rwanda, could encourage people to save more? And maybe one last area here will be the contribution, try to really boost even more the contribution of the diaspora. The remittances in Rwanda is already very important now, more than what we have as FDI, the remittances. Yet, the cost of remittance in Rwanda is relatively high. So something can be done here, introducing, for example, new platform of comparison. When people are making transfer, they can have more choice. And I think some of reform are ongoing now to make sure this happen. But we could also engage more the diaspora to have them to participate to the capital market, to subscribe to the bond that we issue in the country, or even design some specific bond just on the diaspora to encourage them, in fact, to do even more in the country. And one of the ways to even facilitate that participation would be to allow people to buy, to subscribe in the bonds when they don't have necessarily a bank account in the country.
As you've heard from the experts, Rwanda's GDP is expected to gain momentum with a projection of about 7.2% growth. Thank you so much for tuning in. You are with me, Naringwa Fiona Mothoni, and this is The Business Age. As always, you can be part of the conversation on social media. Tag us at The Business Age. Until next time, it's bye for now.